Hello and welcome students. In the last video lecture, I had explained you question number 8, that is bigger sums that are important from the examination point of view. Now in this video lecture, I am going to explain you question number 10th of textbook. So first of all, let us read the question. Vidit and Vishal are partners sharing profit and loss in the ratio of 2:3. Means old profit sharing ratio is 2:3. The balance sheet of their firm as on 31st March 2016 was as under. Balance sheet is given to you, in which capital of both the partners are given. Contingency reserve, it is an accumulated profit that is to be distributed. Workmen's compensation reserve, investment reserve, all three are accumulated profit. Then afterwards creditors and bad debt reserve. Bad debt reserve is not an accumulated profit. It cannot be distributed amongst the partners. Okay, now building, asset side, that is building, machinery, stock, debtors, bank and investment. They admitted Bunty on 1st April 2016 as a new partner. It means there were two partners and they admitted one new partner, that is Bunty, in the firm. Now first of all, let us understand the adjustment. One thing, make it sure that when this type of sum is being asked to you, you have to prepare all the accounts together so that simultaneous posting can be done in any of the account according to the adjustment. After the adjustment, you can see that what things are to be made. Accordingly, that many things only you have to make. Here in this sum, you have been asked to prepare necessary account and balance sheet of new firm. It means you don't have to write journal entries as that we had written in question number 8. You have to prepare the accounts and the balance sheet after the admission of new partner. So over here you can see I have prepared revaluation account, partners capital account, bank account or cash account, then balance sheet after admission, and over here I have shown the working note to you. So let's start with the first adjustment. First one, Vidit will sacrifice 1/4 from his share and Vishal will sacrifice 1/8 from his share in favor of Bunty. It means the sacrificing share of the two partners because of the admission of the new partner that is given to us, that is share of Vidit, that is 1/4, and that of Vishal, that is 1/8. From that sacrificing share, we are going to find the sacrificing ratio by making the denominator equal. Over here you can see I multiplied with 2. So it would come to 2/8 and over here 1/8. So 2 is to 1. That is the sacrifice ratio. And already we had discussed whatever the goodwill the new partner will bring, that is to be distributed amongst the old partners in their sacrifice ratio. Now second one, Bunty will bring rupees 72,000 as capital and his share of goodwill in cash. Now the first entry you can see, that is cash account debit to Bunty's capital account credit, because Bunty is bringing 72,000 as his capital and goodwill in cash. But how much amount of goodwill, that is not specified to us. So first of all we have to find the amount of goodwill or the share of goodwill of the new partner, that is Bunty. So here you can see I have shown the working note of it. First of all, goodwill amount by Bunty, that is share of B. Now what would be the share of B? First of all, the share of profit of B is only not given to us, but whatever the sacrifice of the old partners, that would become the share of the new partner. So over here sacrifice of Vidit, that was 1/4, and sacrifice of Vishal, that was 1/8. So by doing the total of these two, you will get 3/8. So 3/8, that is share of B. Out of the total goodwill, see in the third adjustment the value of goodwill is given to you, but that goodwill is of the entire firm. See, goodwill of the firm is valued at rupees 32,000. That is the goodwill of the entire firm. So that 32,000 multiplied by 3/8, because we have to find the share of only Bunty. So out of 32,000 multiplied by 3/8, so share of goodwill of Bunty, that would come to rupees 12,000. Now the journal entries of which we have to do the posting in the related account. So I have written that related journal entries of goodwill. You can see first journal entry that I have written, bank account debit to premium for goodwill account credit. Students, here it has given in the balance sheet, that is bank. Bank balance is given, not cash balance. That's why I have written bank balance. If in the question it is given cash and bank balance, then you have to write cash and bank balance. Over here, the first entry, that is bank account debit to premium for goodwill account credit, that is rupees 12,000. It means when the new partner is bringing his share of goodwill in the firm. So cash will come or bank check will come to in the firm. So bank account debit to premium for goodwill account credit, that is 12,000. The second entry, when that goodwill is to be distributed amongst the old partners in their sacrifice ratio. We have already found the sacrifice ratio, that is 2:1. So the next journal entry you can see premium for goodwill account debit, that is 12,000, to Vidit's capital account, that is 8,000, and to Vishal's capital account credit, that is 4,000. So 8,000 and 4,000, that is in the ratio of 2:1. Now the last journal entry that is given to you, third journal entry, for that you can refer the fourth adjustment. See, Vidit and Vishal withdraw 50% of goodwill received by them in cash. It means whatever goodwill the old partners are receiving from the new partner, out of that 50% of goodwill they are withdrawing in cash. So the third journal entry that I have written over here, that is Vidit's capital account debit, Vishal's capital account debit, because previously they were receiving, so their account were credited. Now they are, previously they were receiving, now they are getting that, withdrawing that amount from the firm. So Vidit's capital account debit, Vishal's capital account debit to premium for goodwill account credit. Here you can see 8,000, half of 8,000 it would come to 4,000, half of 4,000 that would come to 2,000. So half of the amount they are withdrawing. So 4,000 and 2,000, and total that comes to 6,000. So these three journal entries we have to do the posting in the related account. So the first entry you can see over here, bank account debit to premium for goodwill account credit. So bank account debit, so here I have written, see, to premium for goodwill account, that is rupees 12,000. Okay, and the second journal entry that we have written, that is premium for goodwill account debit to Vidit's capital account, to Vishal's capital account, that is 8,000 and 4,000. So in the related capital account you have to write by premium for goodwill, credit side of the capital account, that is 8,000 and 4,000. In case of Vidit that would come 8,000, and in case of Vishal that would come to 4,000. Now the third journal entry that we have written, that is Vidit capital, Vishal's capital account debit to premium for goodwill. It means they are withdrawing half of the amount in cash. So here this entry, when they are receiving, it was on the credit side, and when they are withdrawing, it would come on the debit side. So here you can see two bank account I have written bracket goodwill, that is the amount of goodwill that they are withdrawing, half of the amount. So out of 8,000 they are withdrawing 4,000, and out of 4,000 they are withdrawing 2,000. Okay, so goodwill point is clear up till here. Now first of all, capital is given to you in the balance sheet. You can see on the liability side Vidit and Vishal, that is 48,000 and 60,000. So the first entry on partners capital account on credit side, it would come by balance brought down 48,000 and 60,000. In the same way, in the bank account also, the cash balance or bank balance is given to you in the question on the asset side, that is 8,400. So here you are writing the first entry, that would be to balance brought down 8,400. Now next adjustment that is given to us, that is fifth adjustment. Up till now we have cleared fourth adjustment. In the first adjustment we have found the sacrifice ratio. In the second one, that he has brought capital and goodwill in cash, in which we have found the share of goodwill of the new partner that we had distributed amongst the old partners in their sacrifice ratio, and out of that the partners are withdrawing 50% of their amount in cash. Up till here we have cleared. Now the fifth point, fifth adjustment, provision for depreciation on machinery is to be made at 10%. So what is the value of machinery given to you in the balance sheet? That is 30,000. Out of 30,000, provision is to be made for depreciation at 10%. So 30,000, 10%, that would come to 3,000. So over here you can see, because of depreciation the value of assets decreases. Due to decrease in the value of assets, loss will occur to the firm. So always revaluation account will be debited if loss occurs to the firm. So you can see I have written on the debit side of revaluation account to machinery account, that is 3,000. And on the asset side you can see simultaneous entry I have written over here, that is machinery. Now the new value I have written, that is 27,000 after subtracting rupees 3,000 depreciation. Next, sixth adjustment, write off rupees 3,600 as bad debts from debtors, and provision for bad debts is to be maintained at 15%. Now you can see on the balance sheet that is given in your question, liability side, last entry is given to you, that is bad debt reserve 1,800. Okay, now that is the reserve that has been created by the firm in order to in future if any of the liability occurs, then that fund or that reserve can be utilized. Now first of all let us subtract, that is 3,600 as bad debts. You can see the new balance sheet I have written debtors, that is 39,600 minus bad debts as per adjustment, that is 3,600. After subtracting you will get the answer, that is 36,000. From that 36,000 you find out 15% of 36,000. 15% of 36,000, that would come to 5,400. So 36,000 minus 5,400, it would come to 30,600. Now students, out of 5,400, the firm is having the provision of rupees 1,800, that you can see in the balance sheet that is given to you in the question. That is better reserve last entry on the liability side, it is given to you, that is 1,800. So out of 5,400, 1,800 you can easily get, but for the remaining amount you have to do the provision. So that will occur as an expense or loss for the firm. So remaining amount, see I have written over here, to bad debt reserve on the revaluation account, that is 5,400. Actually we have to create the reserve for 5,400. Out of that reserve already we are having, that is of 1,800. So still more reserve we have to create, that is of rupees 3,600. So additional liability or reserve that we have to create. So it increases the loss for the firm. So that's why it is written on the debit side of revaluation account. Next one, the seventh adjustment. Market value of investment is rupees 9,000, which is to be recorded in the books. Now investment, you can see on the asset side in the question, last entry is given to you, that is 18,000. Out of that 18,000, new value of investment that you have to maintain, that is rupees 9,000. So on the asset side in the new balance sheet, after addition, you will show the value of investment as rupees 9,000, not 18,000, because as per the adjustment, new value you have to consider only rupees 9,000. Now on the liability side, you refer please, that is investment reserve is given to you in the question, that is 7,200. Investment reserve is given 7,200. So due to 8, previously the value was 18,000. Now out of that 9,000 will subtract, so new value that would come to 9,000. Now to bear this loss of decrease in value of investment 9,000, reserve has already been created, but reserve is for how much amount? That is rupees 7,200 only. So out of 9,000 difference, 7,200 from reserve you will remove, then 1,800 still loss you have to bear due to decrease in the value of investment. Reserve, the purpose is made that in future any of the unforeseen circumstances occur, then that particular reserve can be utilized for that particular reason for which it is created. Over here investment value is decreased, so investment reserve is first of all utilized. When the balance of investment reserve is completed, at that time extra loss will occur to the firm. So here 1,800 more investment loss that we have to write on the debit side of revaluation account. See I have written over here to investment account, that is 1,800. I have not written 9,000 because already there was reserve of 7,200. So additional difference, that is of only 1,800, that we have to write on the revaluation account debit side. Okay students, now moving on to the next adjustment, that is 8th one. Claim of workman's compensation is accepted at rupees 30,000. Now this is also workman's compensation reserve. Generally we are distributing workman's compensation reserve, investment reserve, contingency reserve, that we are distributing amongst the partners in their old profit sharing ratio. But over here there are adjustments. So first of all we will clear the adjustment, and if any balance remains of the reserve, then it is to be distributed amongst the partners. Over here in case of investment reserve, already the balance was less, so already entire reserve was being utilized, so no any balance of reserve was left. Now in case of workman's compensation reserve, you can see that is 24,000 given to you in the old balance sheet. Out of that, as per adjustment, you have to claim is of 30,000. Claim of workman's compensation is mean any of the worker during the time of working in the factory, if any injury occurs to him, then he claims some amount due to his injury. So now that claim that he has asked for from the firm, that is of rupees 30,000. But the reserve that has been created as per your question, that is given to you only rupees 24,000. So additional loss will occur to the firm, that is of rupees 6,000. So here you can see I have written to claim of workman's compensation only rupees 6,000, because 24,000 he will utilize from the reserve. Directly the reserve amount will be given to that worker, and remaining 6,000, that would be additional loss for the firm. So always loss will be recorded on the debit side of revaluation account. So here you can see I have written to claim of workman's compensation, that is 6,000. And on the liability side you can see claim of workman's compensation, that is additional liability has been created, you have to pay rupees 30,000 to him. So I have written over here claim of workman's compensation, that is 30,000. Okay. Now the last adjustment, that is 10% of creditors are now not to be paid. See, on the liability side in the question, creditors value is given to you 30,000. Out of that 10%, 10% means 30,000 of 10%, that would come to 3,000. So that 3,000 creditors now you don't have to pay. So now how much amount of creditors you will pay? That is 30,000 minus 3,000. It means I have written over here, see, 27,000 only you have to pay. So decrease in liability. Due to decrease in liability, profit will occur to the firm. If profit occurs, then it will be recorded on the credit side of revaluation account. So by creditors account, that is rupees 3,000, and the new value of creditors, that is rupees 27,000. Students, in the balance sheet after admission, the new balance sheet, always you will write the new value of assets and liabilities. It means after increase or decrease in assets and liabilities, whatever the new value comes, that you will note down in the new balance sheet after admission. Now after completion of all the adjustments, we have to verify any of the entry is not remaining from the balance sheet. Let us verify. The first entry, that is of building. On building there is no any adjustment, so as it is I have written, see, building 66,000. Then afterwards machinery new value, that was after depreciation, that is 27,000. On stock, no any adjustment is given to you, so as it is from the old balance sheet, that is rupees 18,000. Debtors already have explained, that is bad debts and bad debt reserve. After subtracting, it would come to 30,600. And now bank balance. Bank balance, that we don't have to write from the old balance sheet. We have to write the new value from the bank account that we had prepared. Here you can see I have written two balance brought down, that is the opening balance that is given in the old balance sheet, two B's capital account and two premium for goodwill that I had already explained from the adjustments, that is 72,000 and 12,000, and over here by Vidit's capital account, by Vishal's capital account, that is withdrawn by them, that is 4,000 and 2,000, that is half of the goodwill they had received. After making the total of the debit side, here you can see debit side total is more. If the debit side total is more, it means it is debit balance. So difference would come on the credit side. So this is debit balance as per bank account. So here it is, difference is coming 86,400. So in the new balance sheet you will note down bank balance as rupees 86,400. And the last entry, that is of investment. Investment new value, we have already explained that 9,000 is to be decreased. So now the new value of investment that we have to put, that is 9,000. Now after completion of the asset side, on the liability side you can see capital I have written of 3 partners. In the old balance sheet, capital of only old partners, 2 partners, that was given to you. Now how to find the capital of the new capital of all the 3 partners? Here you can see by balance brought down I have written 48,000, 60,000 from the old balance sheet. By bank account, that was the adjustment when he brings the goodwill amount, capital account of the Bunty. He is bringing capital rupees 72,000 in cash. So what we had written the journal entry, that is bank account debit to Bunty's capital account credit. So in Bunty's capital account credit side we had written 72,000. Now in the liability side, one reserve is given to you, contingency reserve, that is left. Workman's compensation reserve we have completed, investment reserve that we have completed. Now contingency reserve is accumulated profit. No any adjustment related to it that is given in the question. So that we have to distribute amongst the old partners in their old profit sharing ratio. So contingency reserve that is given to you in the question, that is 9,000. So 9,000 that you will be distributing in which ratio? That is 2:3. So 3,600 and 5,400 in the ratio of 2:3. Now premium for goodwill, that entry already we had studied over here, that is with premium for goodwill account debit to Vidit's capital to Vishal's capital, that is 8,000 and 4,000. Now after completion you can see that credit side total is more. So credit side you will do the total, difference you will find out. So closing balance of capital that would come to 49,600, 58,400, and for Bunty as it is, no any adjustment is there, so 72,000 as it is. So in the new balance sheet you will note down the new capital of all the 3 partners. That is for Vidit you will write 49,600, Vishal 58,400, and for Bunty that is 72,000. Total of this 3 that would come to 1,80,000. Now after completion of all the adjustments and seeing from the old balance sheet, any of the entry is not remaining to be posted in the new balance sheet. None of the entry should get remain. If any of the entries posting is remaining in the new balance sheet, then naturally this total will not come equal. Then your answer will also not come correct. So see that any of the adjustment or any of the old entries from the old balance sheet is not remaining to be posted. After completion of the entire sum, you do the total of liability side and asset side. If both the total comes equal, it means your answer is correct. So students, keep revising this sum again and again, because it is very important. This type of sums are very important from examination point of view. Video lecture, you revise it again and study well. And the next video lecture still will be doing few sums related to this type of, and till then, goodbye, stay blessed.